Looking at the global investment universe, where should closed-end fund investors consider zeroing in?
Step one is the asset allocation mix, what type of client you're investing for, what their allocation needs are. I'd say that going into duration-focused sectors like taxable munis, regular munis, and preferred equity is a great way to get some tax-free or tax-beneficial yield, but that's where you're going to get duration exposure. And if your thoughts as an advisor, rates are going to go up faster than the Fed is going to push them, then that's probably an area to underweight.
From a global standpoint, I think everyone knows that the U.S. has largely been the place to be over the last 5-6 years. Both in terms of its currency and in terms of its equity markets and to some degree fixed income markets. I think we've begun to see, both in emerging markets and in developed global markets, somewhat of an improvement in conditions over the course of this year. So that would certainly suggest that that would be an opportunity to look at in the closed-end fund space.
Well, the global environment has been very similar to the U.S. environment, with very low interest rates. But as we think about areas that we focus on, we believe emerging market debt is a very attractive opportunity now for investors. It diversifies a portfolio, allows you also to diversify an income portfolio to non-U.S. investments. We find that very attractive today.
The advantages of the closed-end fund is that you have permanent capital there, you can't have redemptions. Emerging markets can be quite volatile. You can ride that through without being forced to sell some of the more liquid parts of your portfolio. There are a lot of good reasons to look overseas, particularly since US assets have performed so well over the last 10 years or so. Diversification is something I think a lot of financial advisors and their clients will be looking at. The dollar seems to be weakening slightly at the moment. All of those are very good reasons to look to diversify a portfolio, and looking specifically at emerging market equities and fixed income, I think makes an awful lot of sense in the current climate.